So today's video is going to be called The Great Debate. Now some of you, your mind instantly goes to politics, right? Oh, it's a debate. What are you going to debate? No, I'm going to debate ChatGPT. Now in all fairness, this is the very first time that I've ever used ChatGPT. I didn't even know how to get into ChatGPT. Some of you are like, duh, you just type in chatgpt.com. Well, I didn't know because I view this as Cybernet from the movie Terminator. But I figured since I view it as Cybernet, I might as well fight the big Cybernet system called ChatGPT. And I'm gonna debate it. So here we go. First question I'm gonna ask ChatGPT is, what is the infinite banking concept? So let's type that in. And it comes back and it tells me the infinite banking concept, IBC, is a financial strategy that emphasizes the use of a dividend-paying whole life insurance policy as a vehicle for personal banking. I like that because it says emphasizes the use, not emphasizing that IBC is the policy. The idea was popularized by R. Nelson Nash in his book, Becoming Your Own Banker, published in 2000. This concept encourages individuals to be their own banker by utilizing whole life insurance policies with a cash value component as a form of self-financing. All right, I think we're done. So let's scroll back up. So it says, here's a brief overview of how it works. Let's see how right this is. Set up a dividend-paying whole life insurance policy. Wrong. It must be a specially designed and engineered whole life insurance policy to optimize the use of the infinite banking concept. The first step in implementing the infinite banking concept is to take out a dividend-paying whole life insurance policy on yourself. It doesn't have to be on yourself. So I'm gonna go against it. It can be in a company's name, it can be in a trust name. So already I'm winning this debate against ChatGPT. ChatGPT already got it wrong. It's saying it's just a normal whole life off the shelf that your broke-ass brother-in-law is gonna sell you. Wrong, it won't work that well. Will it work? Yes, but not nearly as good. So the policy must have a cash value component which acts like a savings account within the policy. Boring. All right, let's see if it can do any better. Number 2, fund the policy. Okay, I'll agree with that. You pay the premiums to keep the insurance policy active. Part of these premiums will go toward the death benefit, which is the base, which another part will accumulate the cash value of the policy. See, I'm already smarter because I know what those two parts are. Yes, the part for the death benefit is called the base, and the other part is called the paid up additions rider. So, although it's right, it didn't go in enough deep detail for my liking. How about you? Do you think it went deep enough? Number 3, grow cash value. I mean, what are you, Brick from Anchorman? I mean, come on, let's get specific here. Over time, the cash value component of the policy grows. The growth is generally tax deferred under current U.S. tax law, meaning you don't pay taxes on the growth unless you withdraw it. I really can't disagree. I think it could go deeper in that, but I'll go with that. Number 4, borrow against the cash value. Once the cash value has grown sufficiently, which in the plans that we specially design and engineer, you can take the money out immediately in the first 30 days. Clearly, ChatGPT doesn't know anything about those specially designed and engineered whole lives that we do, which actually is probably good because let the competition just learn from ChatGPT. So it's saying once the cash value has grown sufficiently, you can start to borrow against it and various personal financial needs can be accomplished, such as buying cars, funding a business, or even paying for education. The interest rates for these loans are typically lower than what you would get through a traditional bank, and the policy's dividends can sometimes offset the interest on the loan. So we're always talking about the spread, so I'll go a little deeper since ChatGPT couldn't get the job done. The insurance companies pay you a guaranteed interest rate plus dividends, and the amount of that interest plus dividends is typically, in all the ones we use for sure, more than what the simple interest is you're paying on the loan you take from the insurance company. Clearly, ChatGPT has a little bit more evolving to go before it can understand why we use whole life and why whole life is the optimum product to use within IBC. It's simply because we get the spread, and a large portion of what you make is guaranteed. But I'll give it a B- for its effort. Number 5, repay the loan. Okay, you're responsible for repaying any loans taken out against the cash value of your policy. Failure to repay the loan will result in a decrease in the death benefit and may have some tax implications. I don't know what tax implications it's saying. I guess if you were to lapse the policy, possibly. Again, very brief explanation, but hey, it's ChatGPT. It's really not that smart, but I'll give it a B for that one. And then number 6, death benefit. Upon your death, the death benefit minus any outstanding loans, got it right, is paid out tax-free to your designated beneficiaries. A plus, 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 plus. All right, advantages of using the infinite banking concept. Control. You control the loan terms and the repayment schedule. Tax benefits. The growth of the cash value is tax deferred and the loans are not considered taxable income. Liquidity. You can access the cash value anytime. Number 4, dividends. Some policies may pay dividends which can be used to offset loan interest or increase the cash value and death benefit. Key word, increase the death benefit as well. Disadvantages, cost. The whole life policies have a higher premium than traditional term insurance policies. But you see, if, don't tell ChatGPT, but if ChatGPT knew how we specially designed and engineered the whole life policies where we do use that term insurance that it's mentioning is cheaper, we use a term rider in the policy, and what that does is allow us to reduce the cost of the death benefit by adding a term rider, and then the base can be less, and we get much better performance, more efficiency, more access to cash value. But if ChatGPT knew that, everybody would know that. So, okay. Number 4, investment returns. The rate of return on the cash value is generally lower than what could be achieved through other investment vehicles such as stocks and mutual funds. Okay, dude, you just failed. Investment returns? ChatGPT is dead wrong. Whole life insurance policies are guaranteed. They are not investments because investments involve risk. So how is a whole life an investment? And then it's comparing whole life returns against stocks in mutual funds? Dude, totally wrong. Somebody that writes this crap for ChatGPT needs to call them or get into Cybernet and say, dude, you got a lot to learn about how these policies work because you just failed the test. Anyway, note, the infinite banking concept is not for everybody, duh, and it's advisable to consult with a financial advisor who probably doesn't know anything about the infinite banking concept, and tax professionals who probably don't know anything about the infinite banking concept to determine if it fits your financial goals and situations. So, in conclusion, ChatGPT is telling you to consult with the people that know nothing about the concept that you're trying to learn about and trying to apply in your life to take back the banking functions in your life. So let's consult with people that have no idea what it is so they can tell us that's a stupid idea, your dreams are idiotic, just do what we tell you to do, put your money in our control, and life will be good. Fail. I won the debate. Can the infinite banking concept be used without whole life insurance? I'm going to school this thing. It's thinking. Can the infinite banking concept be used without whole life? The infinite banking concept, IBC, as originally conceived and popularized by R. Nelson Nash, is specifically tied to the use of dividend-paying whole life insurance policies. You're right, it is. The strategy takes advantage of the unique characteristics of these policies, such as tax-deferred growth, the ability to take out loans against cash value, and the death benefit. However, big however, some people attempt to apply the core principles of the infinite banking concept, namely becoming your own banker and financial purchases through a self-contained system using other financial instruments. These could include, now, I will say, remember, the infinite banking concept is not a product, it's a process. It's a process of taking back the banking functions in your life. Yeah, I mean, ChatGPT kind of got it wrong, but it kind of got it right. You know, it keeps saying it's just whole life. Now, I teach the infinite banking concept as a standalone process. Outside of North America, I teach infinite banking because other countries do not have whole life insurance policies. So what do I teach them? I teach them to use it with bank accounts and brokerage accounts and all sorts of stuff. So let's see what it says you can use here. And I already see the first one, and I'm going to be upset, but we're just going to read it. All right. Universal life insurance. This is another type of permanent life insurance that could potentially, potentially be used in a similar way to whole life insurance, although it comes with its own set of risks and benefits. Bravo. Bravo. Investment accounts. You could theoretically set up an investment account where you regularly contribute money, allow it to grow, and borrow against the portfolio, correct, with a margin account. However, this doesn't provide the same tax advantages as whole life insurance. Home equity. We teach this all the time. Some people use the equity in their homes as a way to bank their own major purchases, although this strategy can be risky, especially if property values decline. Number 4, retirement accounts. I teach using your 401k and retirement accounts all the time by taking loans. So it says certain retirement accounts allow you to take loans, against your accumulated funds. ChatGPT must be learning from my YouTube videos. Accumulated funds. However, these also come with restrictions, 50,000 or 50%. Sorry, I said that, not ChatGPT. I'm just getting excited. And potential tax implications if not managed properly. Right, because if you don't pay the loan back or you leave the company, then yes, you pay tax on that. And number 5, savings accounts or CDs, certificates of deposit, which I would never say to use one because they don't have liquidity. This goes on to say, while not as complex or potentially rewarding as the other options, you could simply save money in an interest-bearing account and use it for major purchases, replenishing it as if you would a loan. Each of these options has its own set of pros and cons, and none offers the exact same benefits as a dividend-paying whole life insurance policy. For instance, they might not offer the same tax advantages, guaranteed growth, or death benefit. Additionally, the specific rules around loans, growth, and taxes will vary depending on the financial product you're using. For this reason, if you're interested in implementing a strategy similar to the infinite banking concepts without using whole life insurance, it is crucial to consult with a financial advisor, who probably doesn't know about it, and a tax professional, who probably doesn't know about it, to make sure you fully... That must just be like a disclaimer that they put at the end. Anyway, let's move on. So if I were to kind of go to the great debate on that one, I would say ChatGPT did pretty well on that one. I really do think it did well on the question, can the infinite banking concept be used without whole life insurance? Yeah, I'd give that one an A+. We're going to skip the plus on that. Oh, I got a good one. Is the infinite banking concept a scam? Ha, you know. We're going to see what ChatGPT says on this one, because a lot of people out there, especially folks that watch TikTok, a lot of them say this is a scam. So let's check ChatGPT. Now I'm going to check some messages while it writes this really long thing. Oh yeah, but while we're waiting, why don't you like and subscribe this channel? So right at the bottom right now, I'll put it up there. There's a little thing that said subscribe. Yep, it's right there. Yes, click that. Just click that button. And also while you're at it, above, there's a little bell. That's right. Why don't you smash that bell while you're at it? So we'll see how ChatGPT likes smash the bell, but give it a whirl. I almost hit the camera on that one, but that guy behind the camera took that one on the chin. All right, so let's see what it says too. Is infinite banking a scam? The infinite banking concept, IBC, is not inherently a scam. It's a financial strategy that revolves around using a dividend-paying whole life insurance policy as a vehicle for personal banking. The concept was popularized by R. Nelson Nash in the book Becoming Your Own Banker. This strategy takes advantage of unique features of whole life insurance policies such as tax-deferred growth, cash value, and the ability to take out loans against cash value. Notice how it's always the same darn thing? It's got to learn a little bit more. But it says, however, some important caveats to consider. I'm not an English major. The first thing it says is misrepresentation. Well, you bet your butt there's a lot of that. Some agents or proponents may oversell the benefits of IBC, making unrealistic promises about returns, benefits, and applications. Like any financial products, whole life insurance has its pros and cons and may not be suitable for everyone. So what ChatGPT should add in there is those unrealistic promises about returns. That's people saying that Index Universal Life works for the infinite banking concept. That would be the misrepresentation that I think ChatGPT could say, but who's keeping track? Number 2, complexity. IBC involves a complex financial product, whole life insurance product. What? What's complex about whole life? There's nothing complex about it, but okay, we'll go with that. And this strategy can be complicated to properly set up and manage. Misunderstandings and misuse can result in financial loss. Well, you can't lose money inside the whole life insurance policy unless you cancel it before you've made your money back, usually the first 3 to 5 years. But I guess I'll give that one to ChatGPT. But again, we do that for our clients. We know it's complex. We know it's burdensome to manage all of the stuff that you're going to do with the IBC, which is why we have the mapping team and the implementation team to help our clients. But I'll give it to them. Number 3, high fees and cost. Whole life insurance policies often come with higher fees and premiums compared to other types of life insurance like term. Remember I was mentioning earlier, don't tell them, but remember I was saying how we use term in building those specially designed and engineered whole lives? So ChatGPT just hasn't caught up on that yet, but it'll get there. All right, sales commission. Because whole life insurance policies often pay high commissions, they can be a conflict of interest when the advisor or insurance agent is recommending this strategy. Okay, don't tell the folks at ChatGPT or Cybernet that the way we build the policies by reducing the base, increasing the term rider, that we can actually minimize our commissions. We can actually reduce our commissions 60 to 90%, but you know, ChatGPT thinks we're just talking about the whole life your broke-ass brother-in-law tried selling you. Anyway, moving on. Investment alternatives. For some people, there might be more efficient ways to achieve similar financial goals using different investment vehicles such as mutual funds, ETFs, or individual securities that could offer higher returns and higher losses and potential to lose all your money. Anyway, so Wall Street's probably paying ChatGPT for some advertising. I'm sure we can find a Wall Street firm in here. So they're probably lobbying to make sure that we constantly hear mutual funds, ETFs, and individual securities, and those tied to higher returns. But anyway, back to the regular scheduled show. Regulatory oversight. While the insurance industry is regulated, the use of insurance products for banking purposes is less standardized. Always research and understand the specifics of your policy, including its fees and how it's being sold to you. Yeah, I mean, we do everything within the regulated world. Individual suitability. The strategy is not suitable for everybody. For individuals who are not in a financial position to consistently make premium payments, we call them premium deposits, or who need higher returns to meet their financial goals, this approach could be detrimental. So I'll agree with the first part, not the second, because in the infinite banking concept, using the specially designed whole life, not the one that ChatGPT is talking about, you can put the money through the policy, take the money out and invest in stocks, mutual funds, ETFs, investment securities for the higher returns, because the policy or the infinite banking concept is not the and or concept. It is not and or, it is the and asset. So what I mean by that is my friend Caleb writes in his book, The And Asset, is you put your money in the whole life and you then invest that money into stocks if that's what you wanted, and you can make money twice. So ChatGPT just has not learned that yet. We're gonna hit it with one more question. I mean, I had a whole list of them, but the answers are so darn long and kind of boring that I'm putting you probably to sleep. So let's ask one last question. Who is Chris Naugle? I mean, clearly, in all of ChatGPT's wisdom, it has to know who this guy is. Let's see if it does. Ha, I knew it. It knows. Yep. Let's see how many bad things it can say. I might have to send ChatGPT one of those shirts I made that says haters, haters need hugs too. Wow, it's literally writing my novel for me. All right, as of the last update in September of 2021, Chris Naugle is an entrepreneur, speaker, and financial consultant who has gained attention for his expertise in real estate investing and various financial strategies, including the infinite banking concept. Woohoo, we got it. He has been featured in various media outlets and often speaks at seminars, webinars, and other events. How does it know where I've been? To educate people about money management, real estate investing, and personal finance. Naugle has also been involved in the production of educational content, including courses and videos aiming to teaching individuals about financial literacy and investments. Before venturing into the world of financial consulting and real estate, he had experience in the financial services industry. Over the years, he's held various roles as financial advising and wealth management, which provides a background for Chris in his current activities. It's worth noting that the financial industry, including the area of personal financial coaching and real estate investing, is one where credentials, track records, and expertise are important. If you are considering engaging with Chris Naugle or any other financial advisor for services, it's advisable to conduct your own due diligence, including a review of any available professional credentials, client testimonials, and possibly even consultation with a neutral third-party financial advisor. Why is it always saying financial advisor? For most current information, you may visit the official website, chrisnaugle.com, if I might add that, or social media channels. I'm on every social media channel at the Chris Naugle, and as my insight and data may be outdated. Wow, that's pretty freaking cool. Actually kind of scary. Does it know where I live? Does it know what time I take a shower? What time I go for a run? Does it know how many push-ups and sit-ups I do? I mean, what does ChatGPT actually know? Which brings me to the foremost conclusion of today's great debate about ChatGPT. How much should it know? I mean, we all saw the movie Terminator, right? Remember Cybernet? Well, Arnold Schwarzenegger, I mean, I love the dude, but he's getting a little old. You know, is he actually going to be able to kind of zoom back here and fight off the Terminators, the ones with the liquid metal, and make sure that we're protected and someone can go and actually fix this problem? I don't know, I'll leave that up to you. But while you're at it, I got a video that I think you're going to like a lot. Check this video out. How I lost $534,000 using the infinite banking concept. Thanks for joining me. We'll see you on the next one.